Just help us make sense of this market, Rob. Tuesday, of course, we had the big sell-off, lots of worries about what that hotter than expected CPI print was going to mean for the Fed. But listen, investors then stepped in. They bought that dip. What do you make, Rob, of just kind of where the market is now and where you think we're headed?
Yeah, well, thanks for having us on the show. Tuesday was eye-opening. People started saying, oh, well, the game is over. The trend's going down. Not good where it should be. And then retail sales came out. And you get a mixed bag of indices. And I think the market's reaction over the past couple of days has been the right one. It got nervous. It came back. It shrugged it off. And one of the reasons why the market, I think, is doing that was this is not the first time we've seen economic data points be choppy. From July, August, September, data points went in the wrong direction. Market tanked. They turned around. November and December it came back big. I think that set us up to start to think about these data points in a little greater context and say, okay, the longer term trend is right. The Fed's staying on their course. Jerome Powell is saying we're keeping at it, staying on the course. So I think the market is doing what it should do, taking these data points in context.
And so I guess what is the context then for the retail sales report, right? Is it just a matter that we need more evidence to see if indeed consumer demand is slowing? Yeah,
I think retail sales right now, it's a seasonality type index coming January, CPI as well as retail sales are very seasonal, number one. Number two, retail sales is a very goods-oriented index. Many people right now are spending money on entertainment, feel-good experiences, and retail sales doesn't really bring that into context too well. So when you start to think about retail sales and it faltering a bit, I think when you start to look at some of the things that go against it, it doesn't hold as much impact as one would think it should.
And Rob, I'm interested to get your take on valuation. How does it look to you after the kind of rally we've seen here?
Well, I think the valuations, I mean, depending on the sector you're looking at, the tech sector, PE is 46. That leads me to wonder, hey, why did the tech sector drop and all other sectors did well? I think one of the reasons you could point to is you look at a NASDAQ, 60% tech weighted roughly in 1 year is up 31%. Large cap growth up 9% on the Russell. So it pulling back a bit isn't the worst thing in the world. And when you have very expensive stocks within the sector, any little news shakes investors, they take profits and wait to see what's going on. I think we could all agree, retail sales, CPI, and other indices, we need to see continued trend over longer periods of time. And that's what I think the Fed and Jerome Powell, he said he's doing, and I think he is doing that, and I agree with it.